Last year, South Korea's pet insurance industry surpassed a major milestone, with total direct premiums written exceeding 100 billion won for the first time. Direct premiums written represent the total premiums insurers collect directly from policyholders. In other words, the pet insurance market has expanded rapidly. Despite this growth, however, Korea's pet insurance enrollment rate remains relatively low. Although pet ownership continues to rise, only a small share of owners choose to purchase insurance for their animals. So, what is preventing more people from signing up for pet insurance? How does insurance work? Insurance is a system in which many people who face similar risks pay premiums in advance, and those funds are used to compensate people who actually suffer a loss. However, insurance companies cannot set premium prices without evidence. They need to know how often accidents or illnesses occur and how much they typically cost. Otherwise, premiums could be set too low, causing financial losses for insurers, or too high, discouraging customers from purchasing insurance. Insurance helps people manage risk, but it is built on data. Not every risk can be insured. Before an insurance product can be offered, insurers must be able to predict how likely the risk is. Why is pet insurance difficult? When people visit hospitals, the cost of the same medical treatment is generally similar because South Korea's national health insurance provides standardized pricing guidelines. Veterinary hospitals, however, operate differently. Most clinics determine their own treatment methods, equipment, and pricing. To offer pet insurance, insurers must estimate average treatment costs and the likelihood of different illnesses. However, because veterinary fees vary greatly from one clinic to another, and standardized data are limited, insurers have no choice but to assume greater uncertainty. As a result, insurance premiums become more expensive. Consumers may then feel that the premiums are high, but the coverage is limited. Fewer people purchase insurance, resulting in less data being collected. Without sufficient data, insurance products become less competitive, creating a vicious cycle. Why is Sweden different? Sweden is widely regarded as a global leader in pet insurance enrollment. The country has provided pet insurance for more than a century, building extensive data on breed-specific illnesses and average treatment costs. It also maintains a well-developed system for pet registration and veterinary medical records. Thanks to this accumulated data, insurance companies can calculate risks much more accurately. Consumers also find it easier to understand why premiums are priced the way they are, leading to greater trust in the insurance system. Sweden's experience shows that the success of pet insurance is not simply a matter of having a pet-friendly culture. Rather, it depends on building a system that collects and shares reliable data. In the end, the future of pet insurance depends not on more advertising, but on stronger data and greater trust.